Joining us now, Fundstrat Global Advisors, Head of Research and CNBC contributor Tom Lee. Tom, great to have you with us. NASDAQ, I should clarify, will only have gains if it continues its strong session today, so it won't be significant net gains. Tom, great to see you. Long time no speak. First and foremost, what's your reaction to how the market is processed NVIDIA's numbers? It, of course, fell initially in the pre-market. Yesterday morning, it was doing all right, and then it did close more meaningfully down by the end of the session yesterday.
Well, I think NVIDIA is one of these stocks that has become part of like a stock market lore. Almost everyone has a position. And I don't think the results and the earnings changed anyone's minds about AI and the central role it's playing in both global productivity, but also NVIDIA's role. But I think the sell-off tells you that a lot of good news was priced in. I think that's why the stock fell. It didn't take the broader market down. I think that was kind of a positive outcome. And I think it just shows you that there's room for a lot of rotation. And I think that it's revealing that small caps is one of the groups benefiting from that rotation.
Let's talk about that rotation, Tom, and the extent to which there's still a long way to go if you're looking at the valuations of some of those sectors that haven't done so well in recent months and years, or whether things have bounced enough across the board that you start to get a little bit concerned about valuations for the entire market, not just the NVIDIAs of this world.
Yeah, valuations are definitely something our clients are asking us about because, the equity markets have been rising for several years. But the idea of a rotation, I think, is grounded on a couple of things. One is that the Fed's rate path is lower, and that benefits cyclical stocks and small caps. And we know there's also a lot of cash on the sidelines, and investors de-risked because of the yen crisis and just general concerns about the summer. And so I think the NVIDIA results plus the Fed in September is really the catalyst that is going to get some investors to actually follow through with the rotation. So I think we're early because, for instance, small caps, I know people think they're expensive, but the median PE of a Russell 2000 stock is still 10.7 times forward earnings. That's compared to almost 17 times for the S&P. So the small caps have a lot of room for multiple expansion.
But Tom, do you want to just own the index? I mean, there's a lot of not great companies when you talk about small caps, in terms of just not just their indebtedness, but any number of other metrics you might want to use. Are you telling people they should buy individual stocks or just buy the index?
I think it's both, David. We have a lot of portfolio managers that actually focus on small caps, and they're finding a lot of really attractive individual ideas with good earnings growth. But I think there is a misconception about the Russell 2000. I know there's many non-earners, but over 70% of the non-earners in the Russell 2000 are biotech stocks, and I don't think they're meant to generate earnings. And if you look at Russell 2000 earnings in aggregate, it rose 18% in the quarter, and it's projected to grow 39% in the third quarter. So in aggregate, it's not a bad index to own anyways.
Tom, I wanted to get your thoughts on the broader economic data. This morning, PCE came in line with expectations. We had GDP yesterday at 3% versus the 2.8% estimate. As we start to get ready for an interest rate cut, how much is already priced into this market?
We'll never know how much good news is priced in, but I think there was a lot of encouragement in both of the data points you point out. PCE core came in at 0.16. The upside driver there was actually financial services, which is because the stock market's up. It's showing up as inflation in PCE core. The year over year is staying at 2.5, 2.6, which means most people were thinking that year over year would actually tick up. They had negative revisions for the prior months. And on the inflation side, a 2.8 for UMISH 1 year, that's pre-pandemic levels of inflation. Consumers are always around 2.8, so I think this is giving the Fed a lot more green light to cut and focus on keeping the labor market strong, which means it's essentially acting as a Fed put going forward.
Tom, stepping back, you've obviously made some fantastic calls over the last couple of years. I'm interested in your take as to why higher interest rates didn't derail market valuations in a more pronounced or prolonged way. And I guess linked to that is the extent to which actually now when rates come down again, will it really benefit the market as much as maybe some people are expecting?
Yes, I agree with you. I think most of us thought that if the Fed raises rates at the highest pace in history, we should have either had a heart attack in the economy and an economic recession plus a stock market crash. We did get a huge stock market correction, but we got a soft landing. I think parts of the economy did go into recession, Wilford. We know housing activity is recession level. The auto industry is essentially suffering from recession when you look at delinquency rates on loans. So I think there has been real negative consequences of high rates, and we know it's stressing the low-end consumer. I think the CEOs are the ones that didn't get caught in this because the Fed signaled they were going to raise rates dramatically. That means no company did CapEx in the face of that. Many companies cut inventory. They raised a lot of cash. I think businesses prevented us from having a recession because they got cautious. And I think that's why when the Fed starts to cut, there is going to be a positive impulse because, one, there's pent-up capital spending. Companies aren't over-levered. There's going to be IPOs. You guys talked about it, the dearth of it. That should come back. And as you cut rates, that's going to stimulate the consumer.
Tom, real quick, you mentioned the market multiple, the S&P, I should say, at 17. Are you expecting $330 of S&P earnings? Because that's what that implies.
Well, that's the median PE, David. So when I look at median, I'm taking the 250th stock in the S&P, and that's at 17 times. I think in aggregate, the multiple is higher because the Mag 7 have a higher PE. But I think the median is a better way to look at market composition, and I'm comparing that to the Russell 2000 median, the 1,000 stock in the Russell.
Yeah, I wanted to make sure I understood that because that was a bit lower than I'd anticipated. Where are you on S&P earnings? Do you have an estimate?
We originally thought that 2025 earnings at the start of this year would be 260. I think it's tracking closer to 280. So it's not that the market is cheap on next year's earnings because that would be, roughly 20 times. But I think that if we think about market breadth expansion, then we want to think about the stocks outside the Mag 7, and I think there's room for multiple expansion there.
Tom Lee, great to see you. Thanks for joining us.
Great to see you.
All right, I hope you're all having a great day today. The S&P closed up roughly 1% today, and NVIDIA finished the day up about 1.5%. As I mentioned in yesterday's video, we did close yesterday just underneath the 50-day moving average on the daily time frame. The 50 MA is the purple line on your screen, and typically when we close below this moving average on the daily time frame, we trade under it for a number of days before moving higher. You can see that happen a couple of times on the chart that you're looking at right now, and if I were to go back even further on the chart, you would see the same thing happen on multiple occasions. It is typical that when NVIDIA closes below the 50 MA on the daily time frame, then we hang out below the 50 MA for a number of days. Of course, patterns tend to repeat themselves, but they don't always have to. And today we once again close below the 50 MA on the daily time frame. I'll be watching the days ahead to see if we get a retest of this support trend line that stretches all the way back to January of this year. Now I want to go back to NVIDIA's earnings report and mention something very, very important that I just realized today. I'm not going to go through the numbers of the report again because I don't want to be redundant. If you want to see me go through some of the numbers from NVIDIA's earnings report, then feel free to check out the past couple of videos on this channel. So let me briefly summarize the report, and then I want to make a very important point. If I had to summarize the earnings report and conference call, I would say that NVIDIA reported a great quarter. They beat consensus estimates on revenue, EPS, and guidance. However, although they beat expectations, some market participants perceived the report as a mild disappointment because NVIDIA did not beat estimates as much as they have in recent quarters, and this caused market participants to worry about NVIDIA's rate of growth slowing. And don't get me wrong, the rate of growth did technically slow this quarter. On NVIDIA's conference call, they acknowledged that they made a change to the Blackwell GPU mask, and we can infer that this likely caused Blackwell to be delayed by about 3 months. Jensen Huang said the change to the mask is complete and that Blackwell is expected to ship in Q4. And listen to this, because it is very important. NVIDIA expects to bring in, quote, several $1 billion of Blackwell revenue in Q4 when Blackwell begins to ship. So several means more than two, but not many. So let's just say that NVIDIA is expecting $3 billion of Blackwell revenue in Q4. Now think about this for a second. Blackwell is delayed by about 3 months, and NVIDIA expects to see about $3 billion in revenue from Blackwell in the first quarter that it starts to ship. So if there had not been a 3-month delay in Blackwell, then NVIDIA likely would have guided next quarter's revenue higher by about $3 billion. The street was expecting guidance for next quarter to be $31.77 billion, and NVIDIA guided for $32.5 billion. If Blackwell had not been delayed by 3 months, then we would have seen guidance of roughly $35.5 billion for next quarter, nearly $4 billion higher than consensus estimates. And if NVIDIA had guided for revenue of $35.5 billion next quarter, then the growth rate of NVIDIA would still be accelerating. Do you see why this is such a big deal? It all comes down to the delay in Blackwell. The deceleration of NVIDIA's growth rate this quarter was because of the 3-month delay in Blackwell. This is a very big deal because it means that we very well could see revenue growth reaccelerate in the future once Blackwell ships in volume. Of course, I don't know what the future holds, and I could be completely wrong, but this seems very reasonable to me. Additionally, Jensen Huang emphasized on the earnings call that Blackwell is so much more than just a chip. It's an entire platform. This means that NVIDIA has great earnings potential from Blackwell. In the short term, it is entirely possible that the market could treat NVIDIA more like a typical megacap tech stock, and therefore we could potentially see a tighter multiple applied to NVIDIA stock in the short term. Long term, though, I am bullish on NVIDIA, and I think it is very encouraging that we could once again see NVIDIA's growth rate reaccelerate at some point in the future. Speaking to the fundamental business of NVIDIA hyperscalers like Microsoft, Amazon, Meta, Google, and Tesla simply cannot afford to be late on AI. They must invest in AI now, or else they will be quickly left behind by their competition. For right now, NVIDIA is the undisputable leader in AI chips, and it's not even close. So whether or not we see NVIDIA's growth rate reaccelerate with Blackwell shipping in volume, I am bullish on the long-term future of NVIDIA. Of course, I don't know what the future holds, but I am bullish on the long-term future of NVIDIA, and I think this company has a clear road of long-term growth ahead of it. With all of that being said, I hope you all have a great holiday weekend. I'm curious to know your thoughts about NVIDIA in the comments below, and feel free to let me know what you think about NVIDIA's growth rate potentially reaccelerating in the future. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.